First rates will just come up on your screen now. It's Tuesday morning. We've had a good Monday, and will it be a good Tuesday? It's a decent start. Tata Motors 533, that's popping up right on your screen. We've got the breadth, and this I think is the talking point now, that Nifty may not do anything. Bank Nifty is marching higher gradually, but it's the market breadth which has opened up right in favor of the bulls. The bulls are saying that now we need to jump on the bandwagon. The Johnny come lately crowd is, I think, getting desperate. It's evident. So it's not like a party or a great pop-up start for benchmark indices, but a lot of mid-cap individual stocks, 2%, 3%, 4%, 5%. I think that really seems to be the order of the day. On a day, Aisha, when the mid-cap index, Nifty is flat, the small-cap index is up almost 0.5%, and the mid-cap index is up nearly 0.3%.
What's the Nifty Bank up to, and have we made it to a fresh high on the Nifty Bank, considering yesterday we just fell short of 10 paise? Unfortunately not. 43,975 is where we're currently at. The Nifty Bank should make it there. It's not a big move that you're seeing on the Nifty Bank this morning. A lot of stocks in focus. Let's start off with HPCL. That's markup performance. The GRM report has the fact that they're looking at listing their lubricant business 0.6% higher for HPCL as we speak. ONGC, windfall tax on crude petroleum has been now reduced to nil. ONGC starts off with a gain of about 1.5%. Slew of numbers there. There's of course PVR. While the numbers, yes, have reported a loss, there's been a 50-screen shutdown as well. The stock starts off lower by 3.5%. On the other hand, Ultratech Cement is looking at commissioning brownfield cement capacity in the state of Rajasthan. So that's another stock which is in focus this morning. Berger Paints has come out with decent numbers after Asian. The EBITDA is higher by about 6.5%. The gross margins have expanded about 90 basis points, but not seeing much excitement on Berger. Astral, Pfizer, they've all come out with good bangs. Suryodaya Small Finance Bank, Uttam Sugar. These are a bunch of earnings which the market would be reacting to this morning. Of course, there's Home First Finance, wherein Norges Bank and Society Generale have been buyer in the block deals. So those two stocks as well are in focus. And then, of course, on the downtick, while, of course, PVR is reacting quite negatively to its numbers, there's also MK Global, PNG Health, there's Coromandel International, wherein the profits have been lower by 15% and margins also have contracted nearly about 200 basis points. But yeah, some of these stocks not really seeing much of a reaction. Tata Motors, Hero MotoCorp, the two star performers from yesterday, besides of course the entire realty pack. DLF I can see is still holding out in the green. Tata Motors takes a bit of a pause. Hero MotoCorp will come up on your screens next. Still going higher, 27.12 on that stock now. Oberoi Realty, Godrej Properties also would be worth taking a relook at. But Kunal, very tempered move on the index, not complaining, but nothing exciting as of now. What are you spotting in terms of a trade?
Yeah, nothing exciting. Again, the same old theme which we've been going through in the last couple of days. The index opens on a bit of a muted note. The action is more stock specific, and the second half is where we see the index action picking up. So let's hope that this time around it's a very similar texture for the markets. The stock which I'd be looking to trade in the open would be ICICI Bank. Looks extremely attractive at the 940 plus mark for itself, and I think that's a stock which is forming an ascending triangle on the hourly chart. So would be expecting a big breakout for ICICI Bank soon.
Okay, and a big breakout for ICICI Bank expected, with the stock at about 945 currently. What about you, Naresh? What's the first trade you're punching in with 18,400 intact on the screen?
So looking at L&T Finance Holding, that's the one which is trying to make a 1.5 to 2 year breakout. Looks very promising. Could go back to 120.25 levels, which is where it was pre-COVID. So expecting this to break out over the next few sessions.
All right. We are off to a good start for the market breadth, a flat start for benchmark indices. Ashwini Agarwal joins us, founder with Demet Advisors. Ashwini, good morning. Thank you for joining us.
Morning, Nikunj. Thank you for having me.
6 weeks, only 6 weeks. Multiply with number of days and number of hours, it's not a big number. And the world has changed for equity investors. For a market which was staring at a possibility of a breakdown, we have a print of a new all-time high on the Bank Nifty and hopefully soon on the Nifty. What has changed and why it has changed?
So a few things. I'm sure this has been discussed on your show before. But one is that the outlook for interest rates and inflation has dramatically changed in the last couple of months. If you look at the inflation data in the US, you look at inflation data in India, it's all pointing to the fact that RBI's decision to hold was right, and giving everyone the confidence that a pause by the Fed is now obviously given. Whether they cut a few months from now or not remains to be seen. So I think that is, first thing that happened. The other thing that happened was that in early March, obviously, there was this banking crisis which was unfolding in the United States and partly in Europe. And that seems to have found some sort of a closure, in the sense that while there are still issues out there with the smaller banks, the loss to the aggregate system in terms of market cap involved, or in terms of the potential fallout on larger banks, that's quite contained. So I think, where people were worried that, look, is this a repeat of 2008, and are we starting to see a big sell-off? I think now, zooming out a little bit, people believe that financials are not significantly at risk, especially the larger ones. And that narrative has sort of solidified over the last 6 weeks or so. So I think those are the two things I would say that have helped significantly. And lastly, the earnings season has been fairly constructive in India. We've seen raw material prices come off, and that's feeding through to higher gross margins across a whole host of manufacturing companies, leading to hopes that as demand kind of kicks in, you will see operating leverage play itself out. So I think, those are, I would say, the three things that have helped.
I look at the market and I say, okay, all-time high, but frankly, I'm surprised that DI cash holding, all-time high, open interest, 30% lower than when the previous high on the bank Nifty was on an aggregate basis. FIs, they may have bought for 13 days on a row, but the number is still a fat negative for the year. So can I say that now is the time when the naysayers will turn believers and everybody is feeling the fear of FOMO?
I don't know. Nikunj. It's too early to say. I'll look at the mutual fund inflow numbers for the month of April. I mean, despite a very solid market performance, the net inflow into equity mutual funds for the month of April was roughly 1/3 of what it was in March. So typically, of course, March you see a peak every year, but I think the April numbers surprised me. I thought that with the market finding some legs, you'll probably see at least a 10,000 crore print. So, the enthusiasm was missing among the domestic investors. Foreign investors, or rather FII flows, if I think about it, it's a very unpredictable number, because it's driven by a whole host of factors. What's happening to EM allocations within EM, cross-country flows. Suddenly I'm told, I'm no expert, but I'm told by people who follow other emerging markets that China is again starting to kind of fall out of favor in a relative scheme of things. So that might have helped. So, these are shifting stands. I don't think that, we can take a cue from foreign inflows over the last 15 days and say that over the next 2 months, they'll continue to be buyers. But I'll tell you something. If I look out over the next 18 months, India is probably one of the few countries that's growing at a reasonable pace with a fairly healthy banking and financial system in place. And in a world that is starved of growth, any country that will post growth, or companies that will post growth, will get bid up. And that is something that we should not oversee. Anything that's scarce gets bid up. History has always told us that. So in that context, I think over the next 18 months or so, I would be very constructive on investor interest from overseas into India.
So that's my limited point, Ashwini. I mean, this year's number is negative. I know we've discussed it. I'm repeating myself. But all I'm saying is that with each passing day, the India appeal gets bigger. It's getting better. US equities, well, there is a different problem there. Chinese equities, black box there. So I just get a sense that maybe there is a compulsion which could be at play by global investors for 2023 now.
Nikunj, you could be right, but I have this, eerie feeling that every time we say that, there is no other alternative and we will benefit from the Tina factor, something changes. So I wouldn't say that. I would focus more on how the markets will behave in response to earnings, in response to margins, in response to growth, and that would that still leaves me positive. Don't get me wrong. I'm positive. I'm positive with the 2-year outlook. It's just that whether it is the only game in town or not, only time will tell. I think India will grow, and growth is scarce in the rest of the world, so that will obviously be an attractive proposition for overseas investors. But let's see how it plays out.
The thing, Ashwini, that I wanted to talk about, Janet Yellen yet again reiterating the warning of June 1st US debt default. If that were to happen, what does it mean for US equity markets? And then the kind of ripple effect that it may have on India. I mean, does it make India dearer, or do you think we're all going to fall in the same manner?
You're asking me a question about something that has never happened before. Okay. US debt is AAA rated. It is, beyond comprehension that the US will not honor its debt obligation. So, I cannot imagine what the repercussions might be. And if you see over the last 10 years, there have been several instances where this debt ceiling has been hit, and federal offices have been shut, or various functions of the government have come to a grinding halt till the Congress has gotten together and raises the debt ceiling. So I think it's going to be a repeat of the same. I think a default is out of the question, or at least I cannot comprehend what that will mean. Your second question is a more broader one: that are we immune to a market behavior elsewhere in the world? I don't think so. I think all markets have certain sentiments which are attached to each other, and if the US were to roll over in a big way, or other markets were to go down in a big way for whatever reasons, that does tend to impact sentiment in India as well, both for foreign investors as well as local investors. So I don't think I want to go and make a statement that India is immune to market developments elsewhere in the world. That doesn't happen.
Okay, Ashwini, morning. Wanted to also get in your take then on the overall macro picture, given the fact that we're talking about inflation having peaked out, the bond yields as well slipping. How are you looking at India's macros at the current juncture?
I think the macros are looking very solid. You will get decent growth. I was at a 5.5% real GDP handle for fiscal 24. If you asked me this question about a month and a half ago, now I'm gingerly hoping that we can be at a 6% handle. The inflation data is really encouraging. I don't know when RBI will cut. That's a little bit more difficult question, because it might be influenced by Fed's willingness to hold on for the time being. But I think overall, whether you look at the fiscal situation, you look at the current account deficit, you look at the FX recovery in FX reserves, everything is telling you that India is in a healthy space. If you look at the bank sector results that have come out for the March quarter, and you look at the commentary from the banks, they're all talking about very solid credit growth. Yes, there will be some compression in NIMs for sure, because deposits are not growing that fast. But at the end of the day, growth is important, because that is an indicator of what the underlying economy is doing. So I think that the macro situation in India is looking very good. Obviously, as the year develops, the focus will also move a little bit towards the elections that will happen in the first half of 2024. And, one hopes for stability, but one doesn't know what that might bring. So we'll have to see that play out. Within the economic growth, I think the only question mark is on revival in rural demand, where you have the prospect of an El Nino development later this year, and which might mean less rainfall A large part of India's agrarian economy is now pretty well served by irrigation. So it is somewhat immune to rain gods compared to how the situation used to be maybe 15, 20 years ago. So I would hope that to be the case. And the government hopefully will spend on infrastructure and other development projects in the run-up to the election. So I'm hoping for some revival in rural demand, but there are very mixed signs of that. So that's the only question mark that I have. On investment-led demand, on urban consumption demand, I see no issues whatsoever.
Actually, so putting all this to paper then, what should be the tactical allocation towards equities? What are the sector overweights and underweights that you would recommend right now?
See, the asset allocation is a function of an individual's age, income, as well as risk-taking, risk tolerance ability. So it's very difficult to give a blanket recommendation that will apply to all your viewers. But I would say that for somebody who's in their late, say mid 40s to mid 50s, the age bracket I am in, I would say 70% equities, 30% fixed income. That's what I would just put out as a number if I had to put it out. But it has to be tempered by risk tolerance. It has to be tempered by other considerations for each individual investor. Within sectors, I think manufacturing is what I'm quite positive about. And within that, autos and pharmaceuticals in particular, because you will see a significant tailwind to margins from normalizing raw material costs. I think it's already visible in the March quarter numbers, but I think as that factor continues to drive earnings over the next year or so, you might see re-rating in these sectors, because these sectors haven't really done as well as defense-related manufacturing has, for example, where I think valuations are starting to become quite stretched. So I think, over the last 1 year, it's been railways and defense-related manufacturing that has helped. I think consumer-oriented manufacturing is where I would be significantly positive. I'm also reasonably constructive on the banks, where I think the commentary has been more about the worry about slowdown in NIMs. And I think a compression in NIMs, not slowdown, a compression in NIMs will be offset by credit growth. That's my take. So overall, I don't see earnings disappointing even for the banks over the next year. And the stocks have not done much post the results, post very, very good results, for example. So I think that would be an area where I would continue to be reasonably constructive.
Okay, what about IT? Because we haven't really touched upon that. There's two sides to it. One, that we're seeing a lot of disruption, and then there's been a lot of innovation as well that has taken place. From a valuation standpoint, putting all of these factors together, what's the stance on IT?
After almost 1.5 years of underperformance, I was looking forward to the March results to frankly, take an overweight stance. But the commentary from the big players has left me a little bit colder. And I think if you look a little bit deeper and see some of the smaller stocks, they've reported good numbers and good traction in business and recovery in margins. So I think, it's becoming almost a tale of two cities, where smaller companies are able to find their niches and do well, and the larger companies are struggling a little bit, both on business visibility as well as margins. I think an additional worry for me in IT is the outlook for the US dollar. US dollar typically does provide a little bit of a tailwind to IT earnings, and I don't think that tailwind is going to be visible for the next 12 months. And, this chat GPT, artificial intelligence, could it prove to be the undoing of IT services? I don't know. It's too early to say, but, I've been reading various blogs and statements from various people who are kind of doing things with artificial intelligence that have never been done before, which arguably could take away from some of these services business for IT services companies. I don't know how that will play out. I really have no idea, but it's a risk worth keeping an eye on. So if I put all of this together, it still doesn't give me the confidence to go overweight on IT services.
All right. Ashwini, always a pleasure. Thank you for joining us, and
thank you. Thank you
for your valuable
Thank you,
inputs. Canara Bank is looking strong. Bank of Baroda is just looking okay. Nothing big actually. Aurobindo Pharma, what a comeback it's been. 380 has become 630. 50% hike for Aurobindo Pharma, and we're not talking about it. Indian Hotels 2% higher. That's par for course. Markets love that stock now. And then you got very, very anemic gains actually. Tata Motors, yeah, flat. A big Tuesday, a big Monday, but no follow buying, whatsoever in terms of a Monday. Almost Shrabji joined just now, editor with Autocar. It's so nice to have him back and talk about cars and more cars, because there are 100 cars which are going to be launched in 2024. I've been told it's over 100 cars in 2024.
Well, I don't know if it's that many, but if you count a lot of the variants, there are quite a few. I think, I think the main thing is that we've got some big launches coming from, let's say, Maruti, which is, and any big launch from Maruti can really move the market. You've got launches coming from Hyundai, and these are all coming in the mass segment. So I think in that sense, you've got quite a few launches coming from the big players. Honda again, the Elevate, their first big SUV. So I think, it's going to be a very interesting year.
What do you think auto companies are essentially betting on? Are they betting on revival and restoration of supply chain, or are they betting on making the cars big? Because suddenly the SUV market is vibrant. The Indian buyer who used to buy a cycle, then a scooter, and then a small car is straight away moving from no cycle, no scooter to a big car.
So I think honestly, what they are betting on and what's really saving the auto industry, there's been a big change in consumer mindset of feeling people are willing to pay much higher prices for vehicles than what they originally paid. I mean, today the cheapest car, which is an Alto, is really no longer cheap, and clearly consumers are bypassing that and going to higher segments. So I think it's a very interesting situation where the customer is just no more price conscious. He's more value conscious, willing to spend a lot more. And I think that's really working for the manufacturers, because they've really been saved by this consumer mindset, because prices have gone through the roof. If you see the way car prices have shot up because of emission regulations, because of supply issues, raw material issues, logistics issues, it's just been crazy. But I think it's been absorbed largely by the consumer, and I think with that, I think we won't see. I don't think we're going to see some crazy growth like we did the years before, because we had a small base, coming out of COVID, the COVID impact. But I think growth will still be there, but may not be double digit. But I think it'll still be strong, fueled by some key launches. Like the Jimny, for which Maruti said they've got 25,000 bookings already. You've got the Exter coming from Exeter. I don't know how you pronounce it. A lot of funny names today, which Hyundai launching. You've got the Fronx, which Maruti had just launched earlier this year. So a lot of key launches coming in, and I think that's in the mass segment, and that's what's going to drive growth.
Yeah, he hit the nail on the head, Nikun, something that you and I have always been talking about. Who comes up with these names? Jimny, Fronx.
And they're really originals. I mean, the creative behind this, it is not like an extension of a proper noun. It is not something which is acquired from a dictionary of any other global language.
God knows how they come up. And Hormaz, you would know better than us. Yeah. How do they come up with names for these cars?
They it's an amalgamation of what it stands for, so I mean, it's Fronx has some, I don't know what it is, but they have some reasons of frontier and new frontier or something like that. So it's crazy, but thankfully no car is bombed because of a bad name. Yeah. So it's in the end, it's the product that counts. Yeah.
Maruti, I can tell you, it is more like Hindu mythology, because Lord Hanuman is also called Maruti.
Maruti, yeah.
So small car but a powerful car. That was the 1980s, but now the new names, I mean it was a small car in 1990s, but it was supposed to be a powerful car.
Or you go the Mahindra way and do it all alphanumeric. So
that's
very
numerology.
Elon Muskish.
Yeah, so I think, I mean, anyway, what's in a name, as they say.
Yeah. Yeah, but tell me, I mean, is it then clear that Hormaz, much like 2022 or even before that, that the focus is going to be on urban SUVs?
Yeah, it is going to be on urban SUVs largely, and so I think that's really the sweet spot right now for both the consumer and the manufacturer. From the manufacturer's point of view, they will do SUVs because the margins in SUVs are much larger. Because they can charge a premium on it. So the cost of production is very marginally more than, let's say, a sedan equivalent. So they prefer doing SUVs. It helps them. That's what customers want also. I think, honestly, it's our road conditions which are also driving that. We might be getting great roads, but the roads are still in appalling conditions, especially in Mumbai. They're just getting worse and worse. Even when they do a new road, it's a bumpy road. It's an uneven road with sharp ridges. So I think it's driving, people more and more towards SUVs. Fundamentally, they want the higher ground clearance and they want the kind of road presence it has. These are the two factors which drive it. And of course, the practicality that they come with. You've got the space, you can get a lot of luggage. So I think clearly SUVs are still the sweet spot. And again, what's driving it is in every new manufacturer is only launching SUVs. They aren't launching any other body styles. So again, that naturally will push, the SUV market share up. And the growth in SUVs. I mean, you take Citroen, you take Kia, you take MG, you take all the new players which have come. They're fundamentally coming into the SUV space. They're not really looking at sedans at all, or even hatchbacks. Citroen has got a small quasi hatchback, but it's got an SUV-ish look, and the new one again is an SUV. So clearly, SUVs is what manufacturers are launching more and more of.
Quite intriguing. But also, within this segment, are they now opening the pie to EVs or is it still the ICE engine?
No, definitely EVs are going up, but I think that explosion in EVs will only come, I think, post 25 when you see Maruti come in, Mahindra come in, these two big players with their EVs. You've got MG right now with their little Comet, though, I think it's got limited appeal, but still they could do a couple of thousand. Tata ruling the roost absolutely with the Nexon. And, it's getting hard to make a dent in Tata's market share because they're so well established. You see them all over the place. So they've really taken a strong lead in this. And it looks like they're hanging on to it for the time being. But this is a marathon, and they're just out of the blocks right now. But I see the big jump coming in around 2025 when you really see the mass market EVs in the market from other manufacturers other than Tata Motors.
Hormaz, hi, morning. What about luxury cars then? Because the March quarter, you did see a lot of these cars selling like hotcakes. What's happening right now? Are we seeing that continued demand? Who's at the top of the rung when it comes to the luxury car makers?
Well, I think, yeah, luxury cars, again, obviously, it's a booming segment, very small base still. I mean, we don't really do as very, very tiny compared to what we should be doing. Around 40 or 1,000 cars a year, which is just a minuscule, about 1% or thereabouts of the market compared to something like China, which sells in hundreds of thousands of luxury cars. But again, in that space, Mercedes has just kind of completely ruled it, between a 40+% market share, which is huge. So I think Mercedes has done an outstanding job in terms of the way they've kind of made their brand very desirable. They've not discounted it. They've got the full product lineup. The models are all fresh. And the India team is absolutely fantastic as well. So I think Mercedes really is, I would say, the Maruti, not to take it in a negative way, but of the luxury car space. They're really very dominant over there. And others are BMWs there. The Audis had a huge improvement, but again, off a small base. They've really had a big jump in sales. But the others, Jaguar, Land Rover, Volvo, still to catch up. So again, it's a very, very small pie, very few players. You don't have everyone in here. But it's growing. But again, I think there are limitations to what you can do with luxury cars because they're just very expensive. And it's finally the duty structure which is limiting the growth of luxury cars. And who knows in future FTAs if that may come down or not.
Okay, Hormaz, good to have you on board. Thanks so much for walking us through the latest launches and all that's happening in the world of auto. And interestingly, it's not just the roads, but the traffic snarls as well, which is why Amitabh Bachchan, Aisha, recently jumped onto a stranger's bike to avoid the traffic.
So did Anushka Sharma. That seems to be a trend nowadays. Yeah, clearly. You'd have to do that, right?
Yeah,
Where are the
exactly.
roads? And there's so much construction everywhere. But anyway, all for a good cause. Let's now switch focus from autos to FMCG. Let's talk to the management of Sapphire Foods, QSR, and let's analyze their numbers. So as we look at it, there was that 102 crore rupee deferred tax asset which was recognized, which is why the PAT aberration there. But the EBITDA margins also have seen a bit of a dip. The revenues, though, have seen an uptick of about almost 13%. So let's try and understand the entire puzzle. Why the muted margins? Are people not eating pizzas and burgers? Sanjay Purohit then joins in on the show right now, the whole-time director and group CEO at Sapphire Foods, to talk about how he sees business shaping up. Sanjay, hi, morning. Great to have you on the show. Firstly, this is the second consecutive quarter for a decline that you've seen in the same-store sales growth for Pizza Hut. Why is that, and when do you foresee a recovery? Sanjay, you'll have to unmute yourself. We can't hear you.
I'm sorry. This is the travails of Zoom where you mute and unmute yourself. So my apology is there.
Not a problem.
So it's the second year since we publicly listed. So before I talk about quarter, let me just spend a minute on the full year results because that's important. We've had a stonking full year, really stellar full year. Our sales revenue grew to 2,260 crores, highest ever EBITDA margin of 11.7%, 265 crores, highest ever PAT of 6.2%. We opened the highest number of restaurants, 164 crores, and the best ever year for KFC and Pizza Hut. So by all accounts, the year itself was a good year. Now let me come to quarter four. So post Diwali last year is when we have seen a drop in consumer demand, and that has impacted our sales. In fact, I joke sometimes that if you look at QSR results, they will foretell in some ways the GDP of the country. And when GDP drops from 7 to 4% as it did in the October-December quarter, so you know that there is a little bit of push on discretionary income. So Pizza Hut had a negative same-store sales growth, but the positive part was transactions were still positive. And the opposite was possibly true on KFC. We had same-store sales growth muted though, but negative transaction growth. So I think it is reflective of what we are generally seeing in the consumer space where demand is a little bit slow. But I think the important part is that we are gearing up to do or to take charge of the market. And there is much exciting news on both the brands. On KFC, we launched our value, a completely different layer, we call it, the chicken roll starting 99. In Pizza Hut, we revamped our menu, 10 new pizzas. We've launched a new advertising campaign. We are back on television after a long time. So while I see the discretionary income slow down, perhaps a 2-3 quarter episode, but eventually we've got to come back.
On television, I don't see your ads on ET now. Am I missing on something?
I don't know. To be honest with you, I don't look after the media part, but if they're not putting money on ET now, I think it's a big miss.
When do you see the same store sales, SSS? It's a number markets are obsessed with. It's a market which historically has been used to judge the growth of the company. When do you see that becoming positive?
So I would think that the general a GDP slowdown perhaps is another 2 to 3 quarters for it to come back. And I'll just try and explain why has this happened. In many, so coming out of COVID, we first saw pent-up demand bumping up the revenue numbers for many consumer companies, including us. So we saw last year, the first half was very strong. And then it was also backed by high price increases that we took. So we took nearly double-digit price increases on both KFC and Pizza Hut, whereas actually our inflation was in the mid-teens. So generally we see that when there is such kind of inflation, there is an impact on demand. But I would say perhaps the next 2 to 3 quarters might be a little muted, and then we will start to see same-store sales growth come back. But really the picture to look at is both same-store sales growth as well as systems growth. And let me explain. So if you look at KFC, KFC grew at 23% system growth or 24% system growth, but 2% same-store sales growth. And generally we have guided saying that over a 3-4 year period, we would see same-store sales growth 5 to 7%, but we want to improve accessibility on the brand, and therefore new store addition will add 17-18%. So really it's a combination of both that's at play.
Have you started putting your pizzas and KFC's chicken on ONDC network?
In fact, this in exploration at the moment.
Life for a restaurant company or a fast food company like yours, ONDC?
Come again, because your voice is fading in and out.
Okay, how will ONDC change life for the sector and for your company?
So I think the way that we've got to look at ONDC, it's another channel for us to use to reach consumers, and therefore any way to become more accessible is something that we will adopt.
Okay. There was an extraordinary spike in inflation, extraordinary spike in energy cost. Now that things have stabilized, wheat prices multi-year low, energy prices have stabilized, everything has stabilized in the commodity market, but you took a price hike. You were forced to take a price hike. Now that prices have come down, are you likely to reduce pizza prices? Are you likely to reduce item prices?
So last year, we saw this bump up in all prices, and those price levels have remained constant. So what we have seen is inflation on top of what prices that we saw, that has cooled off. And I'll explain again. So on KFC and Pizza Hut, we saw raw material and packing material ingredient pricing to be close to 16 to 17%. That was the kind of inflation that we saw. And we took price increases only in the region of 9%, and therefore we saw gross margins also impacted in the short term. Today we are seeing on two big raw materials, chicken as well as dairy. Chicken is stable, but still substantially over, say, 18 months ago. Dairy keeps increasing. Oil, flour, etc. has started to stabilize. So I don't think there is a case for us to actually reduce prices. And if you look at our total basket, you're right, utility is commodity prices and raw material prices have reduced, but utility prices have not reduced. So we've seen the highest ever increase in electricity prices in Tamil Nadu. Our minimum wages have gone up by 40% in Gujarat as well as in Karnataka. And with elections due, and this is what perhaps we would see over the next year. So I think inflation will cool down, but it's not going to revert back to the levels of 18 months ago.
I have a very basic question that how many supply chain do you think in India will coexist? The whole restaurant experience, then you've got food delivery model, Then you got a mix of what you do, which is food delivery as well as restaurant food, as well as opening up restaurant, and then you got ONDC. Aren't there too many multiple channels which suddenly are there?
I've grown up in FMCG all my life, and I'll use the lessons from FMCG here. Distribution is key, and accessibility is absolutely key. And hence, you'll find that as channels of increasing accessibility, as channels increase and accessibility increase, finally it is better for the consumer. Then which channels survive really then is dependent on their business model and whether they are able to become profitable or not. But for the consumer, it is only good news.
Appreciate your time. Thanks so much for joining in. So that's the management of Sapphire Foods talking about, yes, there has been a negative same-store sales growth for Pizza Hut, but they have a positive transition growth. As of now, there's no case for the company to reduce prices, and they'll just look at ONDC as another platform. 1287 is where the stock is currently at. Time for a very short break. The management of IGL joins in to discuss their earnings when we return. Thanks for staying on with us. This is First Trade. Jagged edges on the index, but currently circling around the 18,400 mark in trade. It's quiet when it comes to the broader universe. Actually, I stand corrected. It's a mid-cap index that's holding out by a solid 1%, and the small-cap index as well, that's in the green. Names like Sequence Scientific, Astral, as well as Manappuram Finance, Responsive Industries, and Alembic, those are some of the smart movers in trade. But let's move right on then, and we've got with us Sanjay Kumar. He's the MD at IGL, joining in to talk a little bit about their quarterly performance, why the EBITDA has missed street estimates, and what the outlook is on their volume growth. Good to have you on board, Mr. Kumar. Given the sharp drop in global gas prices, the Kirit Parikh committee as well being implemented, what is your outlook on the gas count coming down?
So for the Q1, the gas cost will definitely come down. Last quarter, our gas cost was about 37.5 rupees per meter cube. And we expect that to come down by at least 20 to 25% because of the reduction in APM price, as well as reduction in the other domestic gas, as well as RLNG that we are sourcing from the market.
Sure. So how should one look at the EBITDA versus SCM for FY24?
So for FY24, we are looking at EBITDA between 7.5 to 8 rupees per SCM. For the last financial year, our EBITDA was 6.91 rupees per SCM, which was a bit lower, 6% lower as compared to the EBITDA per SCM for the year 21-22. But for the year 23-24, we expect it to be in the range of 7.5 to 8 rupees per SCM.
So on a sequential basis, volume growth stood at about 2%. Which segments have contributed to this?
So the CNG sale, quarter to quarter, CNG sale was, slightly higher. PNG sale could not pick up. We are working on the same. We have rationalized the pricing in the first week of April. And we are very sure that will have impact on the financials for this quarter as well as the financial year, which is presently going on.
Right, and given that your industrial segment volumes have been a bit stagnant around 1 MMSCMD, what is the outlook? What kind of volume scope do you see?
So industrial segment is actually competing with LPG as well as fuel oil in many places, and some other, unconventional fuel or the other, sources that they are using, including biomass nowadays, is being used as fuel in the industries. And we expect the growth to come now because the prices have, rationalized. Earlier, the prices were in the range of 70 rupees or something like that per SCM. And now we will be reducing the price further as the world market prices are going down.
Right. So with the development of the newer geographical areas, what is your volume growth guidance then for the fiscal?
So we will definitely, grow by 200 to 300% in new GAs. By new GAs, I mean Ajmer, uh, Kanpur, Muzaffarnagar, and Banda also. So we are expecting the volume to triple actually in these places, at least triple. And the reason being that major arterial steel pipelines are being commissioned in these areas, which will help us in growing the sale of CNG as well as PNG there.
And on an overall level, what would be the volume guidance for FY24 then?
So for the company, for this last financial year, we had volume of 8.1 million. For the financial year 24, we expect the volume to be 8.5 to 9 million cubic meter per day. The reason being, what I just now informed you about the steel pipelines that are being commissioned in our some of the new geographical areas, which will help the volume to grow.
And what is the outlook on CNG vehicle additions in Q4, given the sharp cut in gas prices that we saw? Has the vehicle conversion rate improved?
The vehicle conversion rate has improved now after the year ended. During the financial year 22-23, the vehicle conversion rate was continuing towards the last quarter at around 14 to 15,000 vehicles per month. We expect that to pick up and go to about 18,000 to 20,000 vehicles now because CNG prices have now normalized.
In FY23, you announced a higher dividend compared to previous year. How should investors look at this going forward?
This was a one-time dividend actually because we entered 25th year. This is our 25th year, which will be ending in December 2023. And that is why, to celebrate the 25th year of the company, we had paid that special dividend. We don't foresee that to be a normal, an every year phenomenon.
All right. Appreciate your time. Thank you so much for joining in, Mr. Kumar, and giving us a view on IGL. So as of now, they are working on improving their PNG sales. They're seeing volumes for FY24 at close to 8.5 to 8.9 MMS CMD and still scouting for acquisitions. That's the stock currently knocking on those levels of 490.
Okay, from these set of chart busters to what's actually busting the charts on the equity markets, let's take stock of that. Let me take it across to Kunal. Kunal, flat day for the index, but anything that you're spotting?
So it's the chart of Ashok Leyland, which is actually looking very interesting. We flagged off the stock yesterday as well, that how the charts are shaping up for Ashok Leyland. And on the daily charts, the stock is looking attractive because of a stochastic oscillator breakout for Ashok Leyland. So that's a stock which I believe at 154 approximately looks attractive. So would suggest the buy on Ashok Leyland, expecting the stock to get into this swing breakout and possibly head towards a 10% higher target from current levels of 166.
Okay, let me take it across to Naresh as well. L&T Finance is on his radar. Naresh, what are you spotting?
So the chart looks very promising if we look at the longer term picture for the last 2 years roughly. If we see the chart here in front, we've had this problem at 95 to 100 for the stock. This was the problem for the last 6 months. It tested 3 times between November to Feb. Then it went back, retested the lower trend line at 80, 85 and has now made a comeback. Previously also in 2021, that is where it topped out. So it's a huge inverted head and shoulders pattern, or you could call it a cup and handle pattern. And now for the last 1 week or so, the stock has sustained about 95. The first indications that the breakout could be in play now. Once this breakout plays out, which it has tried to do today by sustaining crossing 100 levels, a target price would be a minimum of 125, a stop loss to be kept at 94.
Okay, let's move on and let's get some individual trading ideas too. Naresh?
So first is a buy on GAIL India, good follow-up momentum today as well. A stop loss at 109 and a target price of 125. Second is a buy on HAL with an extreme short-term view. The stock has made a new 52-week high today. A stop loss at 3,030 and a target price of 30 to 50.
Oh,
Okay, let's find out, Kunal, what's on your radar today?
So two buy calls. GNFC is the first stock, confirming a breakout for GNFC. That's a buy with a target of 675, stop loss at 630. And Devyani International is going through a very vertical kind of a rise in the last 1 or 2 months. So that's also a stock indicative of possible breakout towards the previous highs. 196 as a target for Devyani, stop loss at 180.
Okay, there you have it, all of your top chartbuster ideas. Well, let's get a move on then, and lots going on in terms of the small cap deal flow. They've all been a buzz. There have been several deals, lots of fundraisers as well that have taken place. Let's take it across to Sharad, who joins in with those details. Sharad?
Well, yes, important deal flow and fund flow announcements are happening in the small cap space, and the first stock in focus would be Jupiter Wagon, where they have raised almost 125 crore rupees via QIP issue, and the key allottees include Tata Mutual Fund, Ananta Capital, ITI Mutual Fund and Resonance Opportunities Fund. Now moving on, we have Repro India as well, where Madhusudan Kela promoted at entity Madhuri Kela actually acquired 3.74% stake in the company, while the seller was Malabar India Fund, selling more than 5 lakh shares. Apart from this, also Ugro Capital would be in focus. Of course, their numbers, Q4 numbers were also strong, but board has approved raising almost 4,000 crore rupees via NCDs and also raising 500 crores via QIP issue. Up next, we also have Home First Finance, and over here there was important block deals in the morning yesterday with Norges Bank acquiring 2.4% stake, while on the other hand, Societe Generale also acquired 0.8% stake. Now, there were totally 3 entities which combined value, they sold almost 3.2% stake valued at 330 crore rupees. Amongst the seller, there were 2 promoters, True North Fund and Aether Mauritius, while the third seller was Warburg Pincus Affiliate. And also, Newland Labs would be in focus, where BNP Paribas has actually acquired 70,000 shares, which translates into almost 0.55% stake. And lastly, Ethos will also be in focus, as their MD Yashwardhan Sabu sold almost 1.5 lakh shares, which is roughly almost 0.5% stake in the company.
Okay, thanks, Sharad, for those details. In the meantime, we'll just take stock of what the market is up to. Still pretty flat. Astral, Manappuram, Indian Hotels, Oro Pharma, these are your big buzzers in trade. We'll take a very quick break. Lots more lined up on the other side.